Welcome back. You're watching Stock Picks. Today we look into Naspers-Prosus, Bidcorp, British American Tobacco, and Anheuser-Busch InBev with Wessel Joubert from Oyster Catcher Investments, bringing us an analysis of those counters. Thank you so much for your time, Wessel. I see the Rand hedge effect here, and I'm surprised considering the buying action that we've seen on SA Inc. and the Rand at these levels. Why?
Yeah. So what we've seen recently, is with the positive outcome on GNU. I think positive being post the election, it seems GNU is a very positive thing. I think if you asked anybody prior to the elections if a GNU would be a very good outcome, they would have had their doubts. But as it is, it's a very positive outcome for the SA Inc. shares. And what we have seen is some strength in the currency, but we've also seen some selling down in the Rand hedges to fund the overweight or fund the buying in the local shares. And that has put some pressure and has given us some opportunity on some of these shares.
All right. So would you say now, actually, because we've seen some selling down there, that this is a nice time to get into those stocks?
For certain of them, yes. And we will touch on exactly why.
Okay.
For others, you literally had the translation effect coming through. So as an example, a stronger Rand means weaker earnings for them because they earn in hard currency. So there the dips are justified, but some of them we've seen disproportionate decreases in their share prices.
And some of those are the sin stocks. Let's go into British American tobacco. Of course, there's been quite it's seen as ex-growth. Obviously, we are seeing the kind of shifts from traditional tobacco products to your new age categories, the vapes and all of that. Why the interest in that, considering that it is ex-growth?
So within a portfolio, there's a very nice space for British American tobacco. It tends to be a fairly stable stock between significant market events. So changes in regulation and so on. So there's definitely a building block for it. It is a very, very strong Rand hedge. And I think one of the Rand hedges that we have that reacts the best to the weakening in the currency because it is dual listed and mainly priced in the UK. You have that translational effect filtering through directly. So if you do have a very strong view that the currency is going to weaken from here, it is one that you can hedge your bets with quite easily. But the business in general is quite stable. Now, what we have seen recently is the share price has been under pressure, under quite a bit of pressure, in fact. Part of that is they've got issues in Canada where they might lose their Canadian business. We know there's a potential menthol ban in the US that has now subsided a little bit. I think it's looking a little bit more positive than what it used to look like. And then there's a very big illicit vaping market that is hampering them. And we do expect in the future for that to be solved slowly but surely. But that is a damper on the little bit of growth that they could have potentially had that is putting a lid on it.
Do you also think actually that maybe also in America, because for example in those US stock markets we have seen all the buying action in the AI stocks where there's maybe a little bit of nervousness that we could start to see a correction there. Do you think that it's also set to maybe broaden from, I don't know if it's coming or when it's coming, a broadening out of the buying action there? Do you think that it could be a beneficiary of an increase in breadth on that front as well?
Definitely. So British American tobacco pays out quite a big dividend yield. We know the tech shares in general, it seems like this time around they have gone against the trend so far. But when interest rates do increase, tech shares generally get hurt a little bit. When interest rates come down, guys do go hunt for yield. And because British American tobacco is such a high dividend yield paying stock, it generally is a beneficiary of that. So I would say that if the tech shares do extend their rally, we do think they kind of face a little bit of pressure depending on the time period. But if they do extend too far, it is probably a rotational trade into more staple type businesses, which British American tobacco is.
And earlier on you mentioned, of course, the kind of regulatory challenges also that have come to the fore and could still come to the fore, considering that there is regulatory developments when it comes to vapes. Do you think that that's something that investors could and should maybe ride out, and that could be maybe short-term softening and jitters, but looking at the whole business and fundamentals, that it does still remain very, very defensive?
So what we do see is there is a very high retention of, so traditionally British American tobacco faces long-term headwinds in the
Yeah.
cigarette category, volumes declining. They have been able to maintain a lot of those volumes within the vapor category. As the volume decrease there, it would pick up on the vapor category. Now, what we've seen in the vapor category is unfortunately this rise of illicit trading, and
Yeah.
that's mostly vapes coming from China. We have seen regulators trying to clamp down on it, but so far unsuccessfully. And it's being done at a state level. Um, One or two of the states have implemented it. For 1 or 2 months, you saw a very big kind of correction, I want to say. So a decrease in the illicit market, and then a very steep uptake in the formal vaping market. But because regulation enforcement wasn't strict enough or strong enough post the implementation, that has then subsided. So we do think to protect their tax bases in the long term, governments
Yeah.
do clamp down on this, but it isn't an easy or an easy industry to clamp down on.
All right. Well, let's take a look at Bidcorp. They're in the food space. And quite interestingly, this is one of the companies on the JSE that have gone overseas, that have actually thrived instead of shrinking back into the South African market after failing and coming back with a tail between their legs. Bidcorp seems to be doing very, very well. Is there ever a bad time to go into Bidcorp?
Well, when the price is very expensive, I suppose. It has actually underperformed the rest of the market. You can call it since the SA Inc. rally a little bit. And even prior to that, a little bit, the share price just got extended a little bit too far ahead of, I think, expectations. It is a very, very high quality company. We do think the management team there is probably one of the best on the JSE. They always seem to surprise to the upside. They always seem to eke out a little bit more growth than what the market expects. They're very innovative in what they do. The company's also very diverse. So when certain areas of the company struggles quite a lot, they're able to pick up growth in other areas, which is very, very nice. And on top of that, their growth strategy has historically been kind of an acquisitive growth strategy. So you acquire something or a new business, you kind of integrate them into your whole sales pitch, and you slowly but surely grow that business. More recently, since COVID, we've seen quite a lot of businesses in their industry struggling quite badly, and they have been able to gain quite nice market share off of that. And additional to that, there's a few businesses that have come up for sale that they could buy at quite attractive prices. So those are all factors that we do think kind of puts them in a very, very strong position going forward. The key thing is not to overpay. It is quite expensive on a PE basis. Depends on what the growth is going to be, but we do think with a slightly stronger rand and some weakness in the UK as well as Australia in terms of the consumers being under pressure, Bidcorp's earnings might not be the mid-teen to low 20% growth. It's probably going to be slightly subdued relative to that. So we do think there's a little bit of underperformance relative to the rest of the market.
Well, a lot of the time, we actually get viewers asking if they should go into Bidcorp or one of the retailers on the JSE, seeming to be an either-or situation. Do you think that should be the case, or there's enough space to have Bidcorp and maybe a South African retailer on there?
I think they're two very different plays. Bidcorp is a much more, if you had to ask me which one of those I would want to buy and hold for the next 20 years, that's Bidcorp.
Okay.
Even if you overpay for a little bit now, you're fairly certain that the growth is going to be there in the next 20 years. We know that they have grown internationally. They've done it successfully. So there's a lot of scope for them to grow, a lot of areas that they can still enter, markets that they aren't in, a lot of consolidation still to take place. The South African retailers, on the other hand, it's a fairly saturated market. The growth there is coming from population growth or market share growth. Those are very tough to do in an economy that isn't growing very, very fast. They do, however, when SA Inc. rallies, the South African retailers will outperform Bidcorp in the shorter term.
All right, I hear your point on that. Going back to one of the sin stocks there, AB InBev. Also, what makes it so attractive? Is it all the beer?
That's, people won't ever stop drinking beer. So there's actually surprisingly to that, with the new GLP drugs, the obesity drugs
Yes.
that are coming out in the US, early studies show that it is actually putting a dampener on both cigarette and alcohol consumption
Ah,
for people who use those drugs. So that might be a longer term headwind to take note of. But Anheuser had quite a bad marketing campaign last year.
yeah.
Share price slipped quite aggressively, and we were concerned that potentially they might lose those volumes permanently. The key there is what they call shelf space. So when you lose shelf space, the retailers would not put you in the front of the store. They'll put your beer in the back hidden in a fridge. This hasn't happened. So
Okay.
shelf space wise, they've been able to retain it, which means over the long term, the volumes should come back slowly but surely. Um, so that we see as a temporary, call it maybe a year or two to recover. Might not recover all of it, but it will recover a large portion of it. Second part of it is they've paid quite a lot for their inputs, so aluminium cans, and a couple of the other inputs going into beer. Those prices kind of are coming down, which means they won't necessarily decrease the price of a beer can on the shelf, but they will pay less to produce that. So we do think those margins increase slightly on top of that as well. So one
Okay.
that we are a little bit excited about at this stage.
All right. Yeah, that's actually quite an interesting one that you point out there, that those input prices, we have seen them softening, but they still maintain the margins that they have, I guess, enjoyed over the last while. And you're right. Yeah, people still buy beer. What about Naspers and Prosus, Wessel? I think they did come out with their results a few weeks ago, and they actually look pretty good and also encouraging to see the kind of profitability that is coming through to the other portfolio outside of Tencent. Just talk to me about the attractiveness of those counters.
Yeah. So for us, it's the one that we are most excited about. The main reason is that you've got actual growth within the business, and that being the Tencent side of the business. But it does seem you are right. It does seem as though on the food and classifieds side of the business, the other side, they are making inroads into getting into profitability and cash flow generation kind of territory, which is very, very positive. It means you don't need to continue to use the 10-cent dividend to fund the growth in these businesses for once in a very, very long time, if not ever. They are able to sustain themselves with the cash flows that they generate. We have seen some concerns recently. Delivery Hero had a anti-competitive fine that they potentially have to pay, which is quite significant. This will spill over to other areas of food delivery globally. We do know iFood and the likes are quite big. So there are a little bit of concerns on that side of the portfolio, but that is still very small. Majority of Tencent, or majority of Naspers and Prosus is still predominantly Tencent. When you look at the Tencent kind of business case, the growth is still very, very strong. Top line growth might not be that strong. They did hide some of the top line growth a little bit, and that was more from I think, the Chinese regulator perspective. You don't want to show that you're growing too fast. So they've changed their accounting policies there, but that is filtering through to bottom line. So you are getting massive margin expansion, and they do think that can go on for a couple of years. So you've got very strong growth for a company that has quite a low PE relative to its history, in a very dominant position in the Chinese market, and currently unloved market, but it won't be like that for always.
Yeah.
So we are very, very positive with that. And then what has happened recently is when you look at the discount between both Naspers and Prosus relative to their holding in Tencent, that has widened. And the big reason for that has been, as I mentioned, guys using this as a funder because it has done really well year to date. So they're selling down that portion to fund the buying in the SA Inc. stocks post the positive election outcomes. So that widening of the discount, to us at least, indicates that there's a little bit more pressure than what there should be on the
Okay.
share price. So it gives a little bit of a good buying opportunity, we think.
On the Tencent side, do you think that they've been able to ride out the kind of weak Chinese consumer demand that we have seen, and maybe also just sticking to it, you're kind of betting on a rebound of that?
Yes and no. So the biggest part of Tencent's business is still kind of advertising,
Okay.
which will be related to the consumer. But within the Tencent business, there seems to be so many other levers that they can pull. So products that are massive. Take as an example, they've got a product similar to what we have as Microsoft. So Microsoft Office, your emails, your Excel sheets, your workbooks, that they have been giving out free of charge for I don't know how many years, with a couple of
Yeah.
100 million users. When you go from charging nothing to maybe charging a couple of rand a month, or a couple of Hong Kong dollars or Chinese yuan per month, it makes a big difference. And there's a lot of levers like that they are able to pull. They have products similar to what we know as Instagram, Facebook's, that they've never loaded with a lot of ads, where they can still just introduce maybe one or two ads, and if you increase the ad load by 10% or 20%, it automatically means you've got 10% or 20% more ad revenue that you can generate. So there's a lot of levers like that sitting outside of the consumer pressure, I want to call it,
Okay.
that they can still kind of pull to get growth.
And do you think that just on Naspers and Prosus, and I mean, obviously based on Tencent, that the Chinese regulatory overhang has been worked out of the system at this point?
So we don't think, I mean, you can just look at the Chinese valuations. It's a mixture of a weak Chinese economy, but
Yeah.
also concerns on Chinese regulation. I don't think that goes away in the short term, or in
Okay.
medium term even, quickly. We have been hurt, and you do know that the Chinese government always have certain, I suppose, agendas that they want to push, and it's very, very unpredictable. It's very difficult to say when they want to do what
Yeah.
exactly. On a whim, they can decide, like they did in 2001, I think it was, where they decided overnight the education sector isn't allowed to make any more profits. So it's something to be very cognizant of. In our funds, we limit our maximum exposure that we will take to a Naspers-Prosus 100% because of that exact reason.
All right. Well, thank you so much for your time and giving us insights on those very, very interesting stocks, Wessel. Really appreciate it. That was Oyster Catcher Investments' Wessel Joubert.